Get your free copy of the complete tutorial at www.teachucomp.com/free.
Aside from the balance sheet, the other important financial report is the income statement, or profit and loss report. The purpose of the income statement is to show the overall financial progress a company has made over a period of time. There are two sets of accounts shown in the income statement, the income accounts and the expense accounts. Therefore, the purpose of this report is to show what was earned and what was spent by a company over a period of time. In this report, you first list what was earned, which is tracked through income accounts, and then list what was spent, which is recorded through the expense accounts. So let's begin our discussion of these account types by focusing on the income accounts. Within a company's chart of accounts, income accounts are used to track the amount of money received by the company for sales of products or services. There can be multiple income accounts created to track sales of particular types of products or services. The more detailed your income accounts are, the better you will be able to see what products or services are generating the most revenue. However, if too detailed, this can cause an increase in the time that is spent entering data into sales journals. Generally speaking, it's good to start with a set of income accounts that are detailed enough to show the areas where sales occur, but not so detailed that you have a separate account for every item sold. When you set up your income accounts, look at all the products that you sell and services that you provide and categorize them in a way that makes sense both to you and your accountant. Many accounting software programs make this process very easy by providing you with a sample chart of accounts which you can then customize as needed. For example, assume that you are setting up the income accounts for a small floral shop. The first step is to analyze the products and services that are sold to generate income. Once this list is compiled, start to look at what level of detail is necessary in order to effectively track the products and services sold. Let's assume that the floral shop sells many different types of flowers and that it would be too cumbersome to create a separate income account for each type of flower sold. In this case, you may want to look for ways that you could group the flowers sold in a more effective manner. Let's assume that after an analysis of what was important to track, you created income accounts named roses, all other cut flowers, and floral arrangements to make this information easier to track. Let's assume that they also sell live plants in addition to flowers, and would like to track the income generated from this as well. Also assume that they were releasing a new product line of bonsai trees for sale, which they want to keep a close eye on. This time, instead of creating just one income account for the sale of live plants, we could also create an account for the sale of the bonsai trees. Let's also assume that the floral shop provides floral services for events, and let's also assume that they would like to track the money generated specifically from weddings. Well, in this case, we may create the income accounts of weddings and all other events. Finally, let's assume that we created a delivery service income account to track all the delivery income, and then set up a gift items income account to track all other gift items they sold in addition to their floral products. In the end, the florist would have 9 income accounts: roses, all other cut flowers, floral arrangements, live plants, bonsai trees, weddings, all other events, delivery service, and gift items. By tracking the income generated using these 9 accounts, the florist could then generate financial reports to see what type of product sold or service provided was bringing money into the shop. They could also track this over time to see if there were other patterns, such as an increase in sales attributed to the weddings account in the spring and summer, for example. As they learn to track this information, along with the associated expenses, they can easily find out what items are making a profit.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.